First announcement, we implemented a ERP PDF upload function. So if you have any new files that you submit nowadays, there will be a button that you can click and upload PDFs. And using the OCR system, before where we had to rename the PDFs, now the system will catch the PDF and then rename these for us. There are a lot of glitches that's coming out right now, but instead of waiting for the final versions to come out, we decided to launch the beta version of this OCR function. So you can immediately upload the 200, 300 pages and see how the AI reorganizes the PDF on your behalf. So instead of downloading a bulk, renaming on your computer and re-upload, let's try to upload whatever documents that you have in the re-download, or rename the PDF and upload and see how the documents are being categorized. And if you catch any glitches, please send us a screenshot with the file name. Then IT team will get in and fix the glitch immediately. Ultimate goal this month and the next couple months will be trying to fix this and make it into an automation so you can release this link to the borrower so they can also do the same. And we don't want any delays to happen because of a file organization or renames, or following after a outdated pay stubs or mortgage statements. So it will be a little bit tough in the first couple weeks, but once things are getting into the back of the track, it'll become easier and easier. And second, now we are announcing a fully delegated channel. There is NQM funding taking care of all the non-QM procedures, and there's American Heritage Lending and Luxury Mortgage gave us the QM fully delegated channels. So loan pricing will be available later this week. Loan Sifter will be kept as is for broker and non-delegated channels, and Loan Next will be launched separately, operated separately for the delegated files. And Sydney, our former processor, will now promote herself as an underwriter. So she'll be able to do Q&As and answer any feedbacks. And the scenario desk that she used to run will be now taken care of by Sam. So if you have any XYZ, we're fixing the Google form that we have in the ERP system. So before we have a lunch, please reach out to Sam for any immediate responses and questions. And third, we have a company lunch this Friday at 12 p.m. We're gonna meet all in the office and talk about how the workflow will be and what kind of expectation we're going to share. So if you can join, please let us know, DM us before Wednesday afternoon. Do you have any questions with these announcements we have today? If you don't, let's get into the training for today. I'm going to try something a little bit different than before. So as we are diving into this non-delegated correspondent and delegated correspondent channels, I want to be on the same page with all of you, what it means with TRID document loans and non-TRID document loans. Sometimes we call it QM versus non-QM to simplify, but truthfully, they're very, very different. So I'm going to categorize them into TRID versus non-TRID. Today, I'm going to cover TRID documents, the definitions of these, and what kind of a workflow that Giving Tree has. And if the time allows, we're going to cover the non-TRID as well. So first, TRID document is conformed in 4 different sectors. One is initial loan estimate. Second is locked loan estimate. Third is initial closing disclosure. And 4 is final closing disclosures. At initial loan estimate, this has initial disclosures from state and the loan type regulations and guidelines. It depends on the loan type and state. Sometimes it is 27 to 30 pages. Sometimes when you have more than 4 applicants, this may become a more than 100 pages document. On this stage, you only cover rate, term, and Section A fees, which means Section B through H can change. There is a tolerance percentage that you have to consider. So when we talk to the borrowers before they e-sign any documents, we have to emphasize this document, initial LE or initial disclosures, represent what kind of a rate, what kind of a term of the property, and what kind of a fee on Section A this person will be receiving. And lastly, the company name and the loan officer. So this function determines whether this is a broker file, non-delegated file, or fully delegated file. And we can tell the borrower, yes, I'm the originator, no, someone else is the originator, or yes, I'm the table funder issuing the loan documents at the final stage, or no, I am a broker sending it to a third-party lender. It's a third-party originating transaction. This is determined on day one. A lot of people misunderstand the giving tree because we operate 3 different channels and because we tell others that we are mortgage brokers. Sometimes we forget to say that we are lender when we non-del the transactions. So let's practice of differentiating how we position ourselves to our buyers and the agents. When it's non-del file, we're submitting it to non-delegated channels. We have to tell the borrowers and agents that we are the lender. And because we are opening up a fully delegated channel as well, now we can also add one more statement saying that we underwrite in-house. Second, locked loan estimate. Now we lock in. So this timeline, 15-day, 30-day, 45-day lock period is set on this document, which also means 99% of all the other information are identical, okay? Section A through H, you may, she may, they may say, why isn't the fees changed? Why isn't the closing costs changed? It doesn't have to change. All we need to change with initial LE to final CD, initial LE to locked LE is document release date and the status of the rate lock, okay? So don't mistake. Don't prematurely say to the borrower saying that locked LE will have updated figures. It will not show whom is paying to. Whom pays to information will be showing on the next document called initial CD. Now, initial CD is presentable. It's only presentable when you have invoices, appraisal, credit, HOA, insurance. When we have a fixed annual cost or fixed invoices or value of the home, then we'll be able to issue initial CD. And this document starts the 3-day waiting period for the final CD to come out. So for example, when initial CD comes out and when borrower says, I don't like this loan amount, I don't like this fee, then we may increase the rate, we may change the loan term, or we may change the loan amount. We can do anything, but if these changes incur an APR change greater than 1/8, or if the loan term changes, we have to reset this 3-day waiting period. So which means this initial CD stage, we can now confidently say about 95% of the fees are accurate because we generate this document using the settlement statement from escrow company, or we call it attorney CD. In the West state, dry state, we call it differently. Whether it's closing statement, settlement statement, or escrow CD, it doesn't matter. As long as the fee worksheet are generated and pre-set with most recent date and breakdowns, that's what we based off of this initial CD. So another question may come up at this stage asking for fee differences. Why is the initial CD figures are different than the settlement statement that we received from escrow company or title company? These two can be different because now escrow company is considering HOA proration, all the XYZs on top of what they have provided. And don't get me wrong, initial CD must also have the seller CD, seller credit, lender credit, and proration too. But the purpose of these two documents are serving differently. Settlement statement serves for itemizing how much to pay off and what day we are closing. This document may have a different closing date than the initial CD date. This is to just show the borrower that we are now eliminating all the paddings, eliminating all the potentials, and think about the closing in the next 3 days. And next, when the changes happen, then we call these documents, we put another pronoun in between. So when the locked LE is now revised before CD comes out, we call it revised. Revised locked LE with change of the circumstance statement or COC statement. We already have that in the ERP. So if you want to know more, you can go back to the ERP system and check it out. Same with the CD too. When the rate was locked at 6.5, but if the closing cost is short, then we may end up raising the rate to 6.75 to increase and provide $2,000 to $3,000 lender credit. And then we can issue the initial CD at 6.5% and initially, and then right after we issue the revised CD showing different rate, we start the 3-day counting by issuing the lender credit. But when the changes are not confirmed at this stage, we're going to have a lot of time at the final CD. Now, final CD is coming up with loan documents, with deed of trust and the note. When these numbers change, we have to fully redraw the documents, which delays another business day. Sometimes at this stage, you may question, what if I want to remove or add impound? Then if impound becomes an issue, then we have a step called partial redraw. Partial redraw changes CD, payment schedule, and the closing cost. Funding instructions. So let's focus about this topic. When I wanted to impound and I figured out the closing cost is significantly higher than my expected closing cost, then we can ask to remove the impound. That's from the borrower's perspective. As a loan officer perspective, if it's QM file, we don't care if it's impounded or not. Our fee or rate or rebate doesn't change. But when it's non-QM transactions, our rebate gets impacted because of this impound removal. Sometimes if you ended up selling the par rate, you may not be able to provide this no impound option. Or when the rate that you're selling is greater than this high price mortgage, when the QM report shows you a warning sign that you must impound, you may not have an option to remove this. But let's assume that we removed it because of the COC. Then you have to immediately receive these 3 documents and send it to escrow or attorney office immediately before buyer signs it. When the buyer signs it, you may end up going back and forth and explain additional information. But look at this. All these documents are not requiring notary sign or stamps, which means if the notary signed today at 10 a.m., if these numbers and figures must be changed, we don't have to reschedule with the notary. We can have the borrower wet sign and send it over to us. Then we'll use these new wet sign document, we replace it with the existing one and complete the transaction. All we need to do is to inform the listing agent that we are delaying a couple more hours of closing because of the fee differences, escrow and attorney offices to let them know the closing cost has been updated, and the borrower to wet sign and send over the original documents in the timely manner. So from LE to locked LE, this is 1 day. From locked LE to initial CD, that's 1 day. Initial CD to final CD, 3 days. And funding, 1 day. How many days? 6 business days. Or 10 calendar days. If you lock in on day 1, you can tell people that you can close in 10 days if you follow the TRID timeline, okay? If it's refinance files, owner occupied 3-day rescission applies. So you just add 3 more days. That's why and where the 15-day lock comes from. They also consider this document shipment date of 1 business day. Okay? So if you tell this, do the presentation in front of a real estate offices and guarantee 15-day, when they say, Peter, how can you guarantee 15-day closing? How can you guarantee 10-day closing? Then you break down. You just need to ask 10, 15 minutes of your time. And when you write down all these breakdowns, and if you were able to show them like a screenshot of each document, then you have a higher chance to win. If you create a YouTube video talking about specific documents and breakdowns of what is a total payment, what is the APR, what is note rate, and relationship of these 3 on the loan estimate, or on the CD, why this number, why this representation of agents, escrow offices, and loan officer means, then you have a higher chance to win. It's not a guaranteed, but as you practice how you show the client to navigate and find the answers, that's when they trust you. That's when they want to work with you. I'm not going to work with all the people, but anyone who's looking into specific guidelines, specific breakdowns, anyone who's literally checking line by line, those are the top, VIPs that I want to target, because there are very few of these loan officers who can break down the fees for us, for the buyers. So how about non-owner occupied, second home, purchase and refi? There's no rescission. If you sign loan doc this morning, you can fund this afternoon. We don't need any waiting periods, because as long as we have the signed loan documents, we call this a package. When we have the signed package, Vivian will immediately step in and fund your loan. Problems may come up when the buyers, for purchase transactions, when they didn't wire the remaining funds in timely manner, or for refinances, when the closing cost is occurred because we couldn't roll it into the loan amount. We just need that wire confirmation from the borrower, right? So as a loan officer, what do you need to do if it's a purchase transaction? The first thing you need to do before the buyer signs the loan documents is to itemize what the closing cost can be, and then let them know to round up the amount and send over. If the closing cost is $117,019, roll it up to $118,000. Roll it up to every $1,000, so you don't have to go back and forth. It would be so unfortunate, very unfortunate, if you ask the buyer to wire additionally for $30 or $40 more. Don't get into this trap. Don't round it up to hundreds, round it up to thousands. It's better off that way. And second, if you record this breakdown video when the loan documents are out and send over to the buyer via text message before they meet the notary, then they're not going to be panicked. They're not going to give you a call in between 7 to 8 a.m. talking about same-day closing or special closing, whatever you want to call it. We don't ever have to put ourselves into their shoe. We already have enough time and luxurious options to go over these breakdowns for the buyers. And if the time allows, next couple of weeks, we're going to talk about what we need to point out on the part of the loan document. We're going to specify how we're going to navigate these, home ownership journey. Any other questions? Okay, great. Then I'm going to leave all as is and then talk about underwriting timeline. So there is a TRID timeline and there's an underwriting timeline. We submit, we approve, we CTC the loan, and we fund the loan. Okay? At the submission stage, with Giving Tree, we divide it into multiple steps of pre-registration. At pre-registration stage, this is where we submit or we send out the initial disclosures. We will receive the e-signed initial disclosures. When the e-consent, intent to proceed, is received, then we submit the loan, meaning lender or to investor. So with broker and non-delegated channels, pre-registration and submission applies. With delegation, Sydney will pre-approve and issue conditional loan approval. So this is where the differentiation comes from. You may say, hey, Peter, we submitted the loan 2 days ago. Why isn't the loan approval coming out? When we submitted through non-delegated or broker channels, we had to wait for the buyer to intend to proceed or consent with rate, term, and fee. That's why we had to just wait. This 3-day waiting period still applies. However, with fully delegated file, when you submit it at 7 a.m. today and expect a loan approval at 4 p.m., all you need is to G-chat Sydney, asking her, hey, this is a purchase file. We're about to lock in the rate. Can you review this file first? Then we can do back and forth and issue the approval faster, easier than before. And next, we approve the loan. We call this prior to doc stage. Prior to doc conditions come. So when we approve the loan, we never say to the client and agents that we fully approve the loan, because we fall into a trap of telling people to wow them, to show them that we fully approve the loan, fully underwritten file, right? Receiving fully underwritten approval doesn't mean that this is a full approval or final approval. This is a conditional approval with all of these conditions, prior to that conditions. So let's practice to, use this conditional loan approval as a pronoun when we approve the loan. And this process with broker and non-del, there is an underwriting turnaround time of 48 hours to 72 hours. But with Sydney, we're going to communicate intact as long as all the conditions are coming in and QM and LP runs, then we'll be able to issue a conditional loan approval. Who cares if it has 30, 40 conditions? If the intentional approach is to show the listing agent that we are performing, we issue this document. That's why a lot of direct lender loan officers win the business, not because of a rate or fee, but because of a service. We provide the speed over what we currently have right now. And conditions now go back and forth. Loan officers going to get involved and talk to the borrowers to receive updated steps, mortgage statements, pay stubs, or explaining about the large deposit sources or credit pull inquiries, or letter of explanation talking about the address relation. Many different things come into play, but we need to remember that we ask the same set of questions anytime, all day long. So if you submit a clean document at this stage, we're going to have a clean approval in this stage. So if you submit an incomplete file with a month and a half, 2 months old pay stubs, don't expect to receive clean approval. That also shows I'm going to give you a hard time. I'm being selfish. I'm telling you how difficult it is, and I want you to understand where I'm coming from. Giving tree doesn't work in that way. If you understand the workflow and if you follow through the instructions, and you're going to receive a guaranteed results. It could be an underwriting approval. It could be the documents, TRID documents, issuing loan documents, and funding in a timely manner. And let's assume all the conditions are met. Then clear to close comes. But again, we don't call CTC a final loan approval. If it's a purchase or refinance that has an additional closing cost, we need to make sure these closing costs are coming from the valid and verified source. If you submitted a 2-month bank statement from your personal and ended up using the fund from business accounts, we have to go back. We have to reverse, and then go back to this approval stage again. We have to cancel the CTC and go back. But why do we do that, right? So this is why experienced loan officer and inexperienced one comes from. At the CTC stage, when the funds are verified, income is verified. I want to talk about the income. We verbally verify. We writtenly verify. This one has a 30-day. This one has a 10-day. So if you accidentally submitted a written VOE last month on April 27th, you better fund this file today. If you passed accidentally to later this month, we have to unfortunately order written VOE again, if this was used to qualify the loan. If you prematurely verbally verify the employment and accidentally pass this 10-day counting, I'm sorry, right before funding, we will initiate another verification of employment. And what if this person lost a job on the verbal verification of employment, which occasionally happens throughout pandemic? I'm sorry, file will be canceled. Even though we CTC'd it, even though we've locked in the rate, that doesn't matter, okay? So I want to put a lot of emphasis on this income part. And refund, okay? So submission stage relates to these two aligned, and lock the LE initial CD align with this part. Okay. So you have to lock in order to receive faster clear to close. And CTC and funding related with this. So think of a train. These two tracks are coincidentally existing together, work together, line by line. So sometimes you may say, Peter, all these documents are ready. TRID documents are ready to go. But if the underwriter didn't review, doesn't matter. But sometimes when we have an approval ready, even though we didn't do CTC, it is important to issue the CD so that we can start this 3-day counting. Why do we need to know all these? It's because buyers want to know when they're going to remove their financial contingencies, loan contingencies. Real estate agents want to know when the loan docs will come out. It's really, really fun to see when loan docs are coming out, all the agents, listing and the selling agents are coming down. Even though we delay on funding, right? Even though we push major conditions to PTF condition. I didn't talk about PTF today because with our system, we don't need to talk about it. But when we submit it as a broker file, we can push out the major conditions back into PTF conditions before this funding. Okay? But we don't have to do that because we can sign the loan documents and fund the same day. We're not going to play this game of, hey, wait for me for the next 48 hours, 72 hours because of XYZ. That doesn't apply with our systems today.